Hello guys, I'm Paris, the Options Guy, and welcome to the No BS Trading Podcast. And this is episode number 6 of the podcast. And thank you very much for tuning into this episode. So this week we are going to talk about how there are many rules that are expected, many changes that are expected to come in the F&O landscape of India in the next coming months. And then we are also going to talk about how NVIDIA has become the largest company in the world and how what you can expect from it in the coming future. And then we are also going to talk about what are the major events that are coming in the next week in the markets that you should keep an eye on. So without any further delay, let's just start with the episode and tell you what's going on. So let's start off with what happened in the previous week, where on Tuesday we had the US retail sales data. The month over month change came out at 0.1%. So retail sales grew by 0.1%, but expectations were 0.2%. And then if you see the core retail sales, the month over month change was that core retail sales actually fell by 0.1% and the expectations was 0.2%, an increment of 0.2%. So definitely the consumer has started to again the consumer is getting even more weaker, and this is not a great sign for the US economy, which looks like it has already started to slow down. There are many indicators which are telling us so. If we see jobless claims, unemployment data, and all of those things, it is looking like the economy has started to finally slow down, and the real economy has already sort of went into that you can say sort of getting to that you can say definition of a recession. So after that, on Tuesday, if we see definitely more, as I said, that weaker economic data. But after that, on Wednesday, actually one more thing happened on Tuesday, and that is NVIDIA became the most valuable company of the world after overtaking Microsoft. So definitely a very crazy moment and a historic moment also. And it just I find it very absurd that NVIDIA has finally become the most valuable company in the world. Because if you see NVIDIA, it makes graphics cards, but just 4 years back, when the pandemic was over here, just 4 years back, it wasn't even in the top 50. The company wasn't even in the top 50, and now it is the most valuable company in the world with the highest market capitalization. So it tells you a lot about what some sort of booms can do, like the AI boom or whatever you can say, what those type of things can do to a company. And the company has added more than $2 trillion of market cap in the last 6 months. Just look at that, just think about it. $2 trillion in 6 months. That's completely crazy. That's more than GDP of so many countries, and in just last 6 months. So Nvidia is now larger than the entire crypto market combined. So the market cap of every crypto coin combined is still lesser than the market cap of Nvidia. It is 5 times the market cap of Tesla. It is more than the market cap of the entire French and UK's stock market. Like, just crazy. And it is very close to even overtaking India's stock market capitalization, and it is also larger than the collective net worth of the 12 richest people in the world. So definitely everything's going crazy in NVIDIA, but I would recommend, please do not go into this FOMO, because there are many you can say hollow things over here which I do not really like. I mean, if you look at NVIDIA's financials, they will look great on paper, but if you dig deep and see what exactly is happening in the company, most of their sales, majority of their sales are being made on a credit basis, so they are not getting the money in hand as of now, right? So, and a lot of these people can also cancel their orders, because of which their sales might even fall, or they might also even make a loss in the coming quarters, or just come below expectation. Their sales might come below expectation. So I would say, do not get carried away. There are a lot of things over here which are not really as rosy as the picture which is being painted painted by NVIDIA or painted by the market regarding NVIDIA. Just be very careful over here, because this might also be one of the biggest stock bubbles in the history. Because whenever there is a craze like this, like the AI craze which is going on right now, whenever there is a craze like this in the market, some other sort of craze which gets out of hand, these type of companies can get very valuable for a while and then come down crashing as soon as the craze starts to cool off. So I would say do not go into the FOMO and buy at high levels and just hold and think that the investment will become 10x or after again like this. Chances of that happening are near, you can say, impossible. So definitely NVIDIA being very crazy, and I'll also make a video on that, on why NVIDIA might not be as good as a picture that it seems. So keep an keep an eye out for that. I will release it on my YouTube channel. But after that, if you see, on Wednesday there was a lot of news regarding F&O, Indian market F&O, right? So SEBI is expected to first of all significantly change F&O rules, and by and large this significant change will come in the margin requirements for futures trading and option selling, right? Because you don't require margin for option buying. I mean, you only require margin as much as you're buying the worth of option for. So let's say I'm buying an option which is worth 200 rupees, so I'll only need to put 200 rupees. But let's say I'm selling an option which is worth, let's say, even 1000 rupees, I'll need to pay 70, 80, 90,000, whatever margin, right? So yes, SEBI, it looks like they are thinking about increasing the margin requirements for future trading and option selling in a measure to curb options trading. And this is not a good news for option sellers and futures traders. I mean, I don't think it is like a very, very bad news for future traders or option sellers. Yes, there will still be leverage in the market. Yes, the leverage has come down, and you can say it is sort of a good thing, but not a very bad news. But still, it hurts. It just hurts, because someone who really knows how to use leverage will really look at this news and really get hurt. Because when you have leverage in your hand, you can do a lot of stuff, but when leverage is taken away from you, you're sort of handicapped. Not really completely handicapped, but in a sense you are, your potential is being limited. So it has been done in you can say, to sort of decrease the option trading craze that is going on in our markets, but it does not really address the main problem of people's mentality that is wrong. It is not that people are it is not just with F&O. If you see, people will gamble wherever they feel like, or wherever they have the opportunity to. Now, let's say previously, a few years ago, until a few years ago, you had those shops, offline shops, where you used to go and bet, right? They were called Rajshri. Now, after that, we got onto, when everyone got their phones, then we got onto fantasy team building, right? Dream 11 and stuff and whatever. Now people went over there to bet. Now they're coming into F&O. So the people's mentality stays the same. It is only the vehicle that they're using to fulfill their you can say, gambling addictions. So it does not really address this main issue of people's gambling addiction. You ban F&O in India, even then people will find different avenues to gamble. It does not really address the issue. And if you, let's say, increase the margin for option selling or future trading or whatever, people will move to option buying. Do you think, why don't you think that people will not start option buying? Because you can't charge more than the value of the option, right? If the option is worth 100 rupees and I want to buy it, I will only pay 100 rupees, right? I will not pay more than that. I cannot be charged more than that, right? So people will move to option buying, right? Or they will move to forex trading also. Forex trading is also getting very popular in India now. So the main problem is not being addressed by SEBI over here, and that is that you need to change people's mentality and not bring these idiotic rules which will do nothing but harm the people who are actually in the game for the long run and who are actually doing well. So that is one thing I do not really like this change if it happens, because it is not really going to do anything. Like, you know, even if you, let's say, let people sell options for 2 lakh rupees per lot, even then people will gamble. You cannot you cannot change that. You have to understand that it is a psychological problem and not a, you can say, a, like a F&O problem. And then we also had one more thing, that rumors are that F&O income, the taxation on F&O may be changed, and now F&O income might be treated as a speculative income rather than a business income, and F&O might be treated as lottery. And that is another absurd thing about it is a very absurd thing, because if you think about it, F&O is not lottery. It is being used as a lottery, but it is a financial contract. Futures are a financial contract, options are a financial contract. You can't treat it as a lottery, because a lot of people are actually using it as a proper hedge for their business. A farmer is using some sort of, let's say, I don't know, maybe, whatever futures contract is going on, about whatever wheat or whatever rice, they are using it to actually hedge themselves from adverse market price movements. And if you treat that as a lottery and you are going to then put on 30% flat tax on it, it is going to disrupt a lot of people's businesses. You and I and again, it is being done in a sort of, you can say, to curb F&O trading. But you have to understand that again, it is the same thing. A lot of people who are earning 10,000, who are, sorry, not earning but putting 10-20,000 rupees in their account to trade F&O, I think they won't even look at it. To be very honest, they won't even think a lot about it if someone tells them that you can double your money like this, right? By buying some sort of hero zero option or whatever, you can 10 times your money like this. They won't think about that 30% tax. They will go blindsided into the market and buy that, do whatever idiotic things that they do. Or if they say, buy this future, buy that future, do this, do that, whatever. But you have to understand that, again, same thing as before, like, say, as I said in SEBI's case, that they are not addressing the real problem, and same thing is over there also, that they are not addressing the real problem, which is people's mentality. And that is the problem that needs to be solved, and it will not benefit anyone by putting these idiotic rules, like putting a flat 30% tax rate on F&O income. It will disrupt a lot of businesses. And mind you, it is a lot of businesses that can definitely get disrupted, and big corporations will also get hurt a lot, because usually it is these big corporations that actually use these hedges. A farmer who is making very small quantity of, I don't know, you can say, whatever his whatever crop he's growing, he will barely use any sort of derivative contract. Let's say he's growing in a village, but big corporations like FMCG corporations who want to hedge the risk of adverse price movement in the raw materials, they will use these. And if you tax them like this, it will be very, very hard for them to even work in India. So putting a tax on everything will not solve your problems. And again, there is also one more news, that STT will be increased again. It just blows my mind to think that already we have so high taxation on thousands of taxes: transaction tax, STT tax, I don't know, STT, exchange transaction tax, I don't know, whatever bullshit that these guys put in this. These guys are putting on each and every trade, and then you are even increasing STT more. Like last year itself they increased the STT, and now they're again increasing in a bit to let people or decrease options trading. It will not decrease options trading. I don't know who is sitting in that finance ministry thinking that this is a very great idea, and I don't know how they've not learned from just last year's experiences that it does not do anything. It just does not help. So I don't know why nobody is really addressing the real problem, and I'm really frustrated because I do a job where I trade in F&O for as a proprietary trader in a company. So you I know that money can be made in F&O if you're really disciplined, but if you're going to put such idiotic rules, you're killing that market. You're completely going to kill that market, which up to a point, curbing is a different thing and killing is a different thing. And if you kill it, it is going to have adverse movement, sort of domino effect on many other things in the market. So not a great sort of move by both SEBI and you can say, if that happens again, these are sort of rumors. Nothing is like, you can say, guaranteed to happen. So these are rumors, or you can say expectations that has come out in the market. But let's see how things go, because if these rules are released, it would be very, very idiotic. Yeah, because the real problems are not being addressed by the authorities. But yes, let's move on from there. I think I have ranted a lot over here. So after that, on Friday, we had the US manufacturing PMI and the services PMI. US manufacturing PMI came at 51.7 and services PMI came at 55.1. Good numbers, but it is now sort of painting a sort of mixed picture for the economy, because last time US PMI, the both services and manufacturing PMI didn't came out so good. This time they came out a little bit above expectations, which tells you that the economy is economic activity, manufacturing and services activity is increasing a little bit. So this is sort of a bit of a, you can say, a mixed bag kind of thing, because other indicators are indicating that the economy is slowing down, but this is an indicator. And after a long time, we've gotten some sort of a reading which is telling us that the US economy is actually growing. So let's see how this goes. This is the first sign. This is not like the final sign or anything, but this is the first sign. So we'll definitely keep an eye on it. And market also didn't really react so much. Even though the data was good, the market didn't really react. There should have been a bit of a rally, but the US markets were pretty flat. So let's keep a very good eye on that in the coming months on this data point, and let's see what conclusions we can bring out from that. Now let's move on to what we can expect in the next week and what are the major events that are going to come. Now, next week is a week which we do not really have a lot of data to look forward to, but still on Thursday we have the US GDP data, and the expectations are that the US GDP will grow by 1.3% YOY. So let's see, since the last 2 months US GDP data has been coming below expectations, not a great number. So let's see this time how the US GDP data is coming, given that the retail sales, if you see this week, that came the retail sales data that came out came out weaker than expected. So let's see how the US GDP data performs. And then on Friday we have the core PCE price index. Now the PCE price index, not a great reading that came out a few weeks ago. I do not remember the numbers, but I know that the reading wasn't so great. So now the expectations are that the core PCE price index will stay at 2.8%. It has stayed flat for the last, you can say, since January it has stayed flat. So the PCE price index, basically you can say inflation, personal consumption expenditure price index. So sort of, you can say, close to inflation, you can say, which indicates inflation. Now these numbers have stayed flat since January. So let's see if this time we can expect a fall, or are we going to see again an acceleration in this number? Because if this number accelerates, you will see a sell-off in the market again, since the US markets are also not really looking that good. So keep a very close eye on the core PCE price index more than the US GDP data, because I feel like that will be a more effective a thing that affects the market more than the US GDP data. But still, aside from these two data points, we don't really have anything for the next week. So let's move on to what are the IPOs that are going to come in our markets next week. Now, talking about the IPOs that are going to come in our markets in the next 2 weeks, we have two IPOs, and that is Allied Blenders and Distillers Limited, and then we also have Vraj Iron and Steel Limited. So these both IPOs, one is you can say a company that makes liquor, a distilleries company, and the second one is a iron and steel company, right, which makes iron and steel products. So pretty self-explanatory, but what do these guys do and how do these guys do it? Let's see about that. First, talking about Allied Blenders and actually first let's go over the gray market premium of both of these IPOs. Now, Allied Blenders and Distillers, if we see, the gray market is right now is at 20%. So if you're applying for listing gains, not a great company. If you're applying for listing gains, do not apply at least until you get 50%. So let's say by the third day of the IPO that it is open, if let's say the GMP goes up till 50%, then you can think about applying, or else do not think about applying if you are going in for the gray market, if you are going in only for the listing gains. Second, the Vraj Iron and Steel IPO, if you see the gray market premium right now at 10%, not a very good gray market premium. So definitely do not apply if you are applying only for the listing gains. I hope that is clear. So both of these IPOs, if you are applying for listing gains, as of now it is a no. However, if these guys go up till 50% gray market premium, then you can think about applying. But I don't think they will also go over there. So yes, not from the gray market premium, perspective, not a great pick for both of these. But yes, what can we expect from these guys in terms of fundamentals, in terms of investment, right? Should we invest in them and not think about the listing gains? So let's look at that also. First of all, the Allied Blenders and Distillers Limited IPO is a 1500 crore IPO, out of which 1000 crores will be a fresh issue. So 1000 crores will go to the company and 500 crores will go to the promoters of the company. And Vraj Iron and Steel is a completely fresh issue of 171 crores. So all of the 171 crores will go to the company itself. So pretty good. Not a lot of money that is going out of these companies. Most of the money coming inside these companies, which is good enough. So both of these IPOs will open both of these IPOs will open on June 26th and close on June 28th, right? So now talking about first of all Allied Blenders, and then we will go on to the Vraj Iron and Steel also. So out of these Allied Blenders, if you see, the revenue has been 8,900 crores, 934 crores for 2019, right? And now the revenue for the last FY23 has been around 6,000 crores. I do not have the numbers right now over here, but around 6,000 crores the revenue has been. So revenue, if you see, has actually decreased from 2019 to 2024. The revenue has actually decreased, and this is not a great sign for the company. Definitely not a great sign in terms of profitability that is being shown, the growth that is being shown by the company, right? Now, if let's say the company is making 8,000 crores of revenue, right, or 6,000 crores of revenue, leave 8,000 crores, let's say the company is making 6,000, 7,000 crores of revenue in a single year. So you would expect like at least, let's say 800 crores of profit, net profit margin to be at least 10%, right? 700-800 crores of profit seems pretty reasonable, right? But their profit after tax for FY23 is just 1.6 crore rupees. Just 1.6 crore rupees. However, as of the first 9 months of FY24, their profit after tax has increased to 4 crore, but that is minuscule. That is like MRF giving, which is a 1,50,000 rupees share, giving you a 10 rupees dividend. It is something like that. So profitability, revenue not growing, profitability is at a completely shit level, you can say. I shouldn't be using that word, but still completely bad level. So as for the in terms of fundamentals, company is not great. Please do not apply. There are much better companies if you want to go into the liquor space, like United Spirits. If you see, a very good company in my opinion. If you want to go into something which is a bit of a new age company, then you can think about Sula Vineyards, because it is into wines, and wines is something which is a sort of a growing market in India. And I'm really bullish on Sula Vineyards also, and I also have invested in that company. So there are much better companies if you want to apply in the liquor, if you want to invest in the liquor space of India. Now this company makes Officer's Choice and all that stuff. I don't really have an idea of what how good these things are or whatever. If you have an idea, do tell me in the comments. But yes, um not really a great company in terms of fundamentals. So just stay away from this IPO. I think this IPO is not really that great in my opinion. So that is for the Allied Blenders part. Now let's look at Vraj Iron and Steel. Now Vraj Iron and Steel, one thing that is good is that it is a fresh issue, so a lot of money that will so all of the money will go into the company, which is a very good thing. But now this company, if you see, in FY21 their revenue was 290 crores, FY22 it came to 414 crores, and FY23 their revenue came at 517 crores. So a very good growth in the revenues part, and same thing with profit also, where in FY21 they had 11 crores of profit, FY22 they went to 28.7, and in FY23 they are at 54 crores, and as of the first 9 months of FY24 they are already at 44 crores. So a very good jump in the profit also. If you see, a very good steady growth, a good amount of growth if you consider a steel a company which makes iron and steel products. However, if you see in the first 9 months of FY23, the revenue hasn't grown in that fast. It looks like the revenue will be a little lesser this year, but if this is a sort of a one-time thing, then it is not really a very bad thing or anything. It is a very good thing. It is fine, you can say. So the company looks very good in my opinion, in terms of fundamentals, also in terms of everything, and where it operates in India, it is looking very good, and the future market is also looking pretty good. Now the company is, you can say, the company is you can say operates in sort of middle India, right? And the middle parts of India, and there are not a lot of players in that part of India. So the company does have a lot of growth potential in it, and the IP also looks pretty fairly priced. Not really a very bad pricing for the IPO also. So definitely a very good thing for the company. Even if you see ROE and ROC at 23 and 25%, very nice. Debt to equity at just 0.27%, which is also a very good thing. Now with more 170 crores coming into the company, it looks like the company might even clear more debt out of its books. So that is also pretty good. So in my opinion, from the fundamentals perspective, Vraj Iron and Steel is a good idea. You can definitely think about applying in this IPO from a fundamental perspective. But if you do not want to take the risk, you can still wait for the or let's say you do not want to apply the whole 15,000 rupees, you want to apply, let's say, 4,000, then you can wait for the definitely you can also wait for the IPO to get listed and then apply, because anyways it is not such a very big, it is not a very big gray market premium that is going on. So chances are IPO will open flat, close to the price of at which it is being allotted, which is 195 to 207 rupees. So 207 rupees probably will open somewhere near there, and then you can think about buying also. So Vraj Iron and Steel, very good company, can apply for that. From the fundamental perspective, from the listing gains perspective, not as of now. And Allied Blenders and Distillers, just stay away from that IPO, doesn't really look that good. So now let's move on to the technical analysis of the markets for the next week. Now talking about the market analysis for the next week, if you see Bank Nifty just moving up 3.3% and Nifty actually going up just 0.15%. As I had said that in Bank Nifty, if you want to see strength, it will only come above 50,000. And if you see Bank Nifty going above 50,000, just showing so much strength, right? So what can we do for this week is that Bank Nifty can continue to move up and Bank Nifty will be the one that will lead the market as of now. Now, if Nifty has to lead, it will first need to go about 23,620. 23,620. Once we cross 23,620, Nifty can also then catch a little bit of momentum. But Bank Nifty looks like the one which will lead the market from here. And now this week, if the momentum is to continue, then we can also expect 53,000 very easily in Bank Nifty. Bank Nifty looking pretty good, but in Nifty, if you want to go long, you will need to wait for a good dip on the downside and then you will need to take a long, because in the daily charts, if you see, Nifty is looking pretty weak over here, right? And it has also broken a channel over here, which I'll show you guys in just a while. And Bank Nifty, however, not looking so negative over here, right? And this week was pretty frustrating for me also, because I decided to take long positions so many times, and the market even went in my direction which I wanted, but then it again came and hit my CTC stop loss so many times. So it was really frustrating for me. But yes, Bank Nifty looking pretty bullish, Nifty not so bullish. So once we get a little bit of pullback in Nifty, mostly till 23,300 to 200 in this area, if you see market again taking support, good support, then you can think about taking a bullish position again, because it looks like Nifty will give you one dip on the downside after that. Because the way the candles in Nifty are being made, it is showing that Nifty might see a little bit of correction. It has gotten a little weak, but the way these candles are being made in Bank Nifty looks like it will go till 53,000 very fast from here also. So if you want to buy in Bank Nifty. If you want to sell in Nifty, because Nifty will be the one which will fall more faster, right? So 23,200 to 300 is the area that you need to watch out for. Only if we go below that, that is when we will go into a sort of prolonged consolidation. But until unless we are above that level, there is nothing to really worry about in Nifty for now. And for Bank Nifty, the level is 50,500. Until unless we are not below that level, Bank Nifty will still continue to move up even after a dip. So in Bank Nifty, the major level to watch out for will be for now 50,800 first of all, and then 51,000, right? These are the levels which are a bit closer. Now what might happen in Bank Nifty, if you see over here in the 15-minute chart, is that this level is very important, 51,200, right? And a lot of people would have kept their stop losses also over here. So what Bank Nifty might try to do is go below this level, take everyone's stop loss, take support from this place over here, if you see from where this buying has started to come, and then again come back up. So if you see that, let's say the market opens with a gap down on Monday, the market opens with a gap down, breaks this market breaks this support over here, and then if it is again coming back up and starting to make higher high, you guys can go ahead and take a bullish trade over here. It will give you a very, very good profit, and then you can hold this trade for a very big positional target of 53,000 also. So you can basically take a positional trade over here also. Since this level has become pretty obvious, market will try to break this level and then start to move up. On the higher levels also, if we start to move up, then this trend line will be very important, which I'll just make for you guys just a second. Yes, this trend line over here will also be pretty important. Just ignore this up move over here, because if you see, this up move has happened in the first, you can say, few minutes, so we don't really consider that. But yes, above this level 51,800, once we start making positive price action, higher highs, only then go ahead and take a bullish position over here. You can still take a bullish position over there, and then keep a good target of, let's say, 52,400 or 500 easily on the upside, right? So until then, in between, we will not do anything, because this is a area where things like this will happen, and a lot of stop losses of yours will go without any reason, right? And talking about Nifty, if you see, Nifty has broken this trend line and has broken this trend line with a lot of volatility. Now, as I said, two things can happen. Until unless we break 23,200, there is nothing to really worry about. If we break 23,200, chances are we will go for a very big consolidation for at least a few weeks and then break out on the upside or break out on the downside. So for Nifty, as of now, the level on the upside that needs to be watched out for is 23,620, as I said. Only if we start going about 23,620 is where we will see strength coming in Nifty. Until then, Nifty, chances are that Nifty will lag behind a little bit as compared to Bank Nifty, and Bank Nifty will be the one to lead. So only about 23,620 is where we will see bullish momentum coming in Nifty, like proper bullish momentum coming in Nifty, and then we can also expect 23,800 first of all, and then 24,000 on the upside. On the downside, major level to watch out for is 23,420. If we go below that, then we can expect a little bit more correction till 23,340 to 330, where we have this trend line over here. So you can take a short trade over here also because Nifty has broken this trend line. So chances are Nifty might go down also over here and give you a good trade over here on the downside also. So this is the market analysis for this week. This week, what should happen is that we should not close at lower levels. If we make a wick and again close at higher levels, that is fine. But if we close at lower levels, somewhere near 23,200, 300 or even below that, then chances are that this bullish momentum will fade away and we'll go in a prolonged consolidation, right? And same thing for Bank Nifty also. It is better if we close above 51,000 only somewhere. If we close below 51,000, chances for Bank Nifty going into a consolidation will also become high. will also become high. So now let's move to the concept that we are going to learn today. Now the concept that we are going to learn today is known as rights issue. It is a very simple concept, but it is something that can really help you and earn you a lot of, and give you a lot of money, or you can earn a lot of money with that. So what a rights issue is that, let's say you have a few shares of the company. Let's say Bharti Airtel, right? You have 10 shares of the company, right? And Bharti Airtel comes and says to you that since you are our investor and you believe in the company and that's why you've invested 10 shares in the company, right? We will give you an offer to invest more in the company at a lower price, right? So let's say the market price of Bharti Airtel is going at 1,000 rupees, right? So what Bharti Airtel will come and say that for every 10 shares, I'll sell you one extra share. You can buy one extra share from the company at a lower price of, let's say, 800 rupees, right? So if you have a belief in the company is saying that we'll give you an offer that you can buy shares of the company at a lower price, right? And this is what rights issue is. So let's say if you company says that for every 10 shares you have the right to buy one share from the company. So then so basically, let's say if I have 100 shares of Bharti Airtel and the company says that for every 10 shares you can buy one share at 800 rupees, market price is at 1,000 rupees, right? But the company is giving me an offer that I can buy it at 800 rupees, right? So now I can buy 10 shares from the company at 800 rupees, right? So I can invest at a lower price, and this is what the benefit of a rights issue is. The company can raise capital and you can invest more in the company at a lower price, and then maybe you can sell the shares of the company once you get the shares in your demat account. So this is what a rights issue is. So I hope you guys understand what a rights issue is. A very simple concept, but a very important one if you want to get a few good opportunities in the market. So yeah guys, that was it for this week, and thank you very much for watching till the end. Please excuse my voice a little bit because I have a bit of a pain in my throat, and because of which my voice is cracking a little bit in between. But yes, I hope you guys liked the episode. I hope you guys learned something from the episode, and I hope you guys' time was not wasted watching this episode till the end, or listening this episode till the end. But yeah, with this, I'll take a leave and I'll see you guys again in another week's episode. Bye bye.